All right, welcome back, everybody. Quant Bros, episode 10. We are back. We are going to turn off the war. Lowrider, we're back, episode 10. Here we go, MicroStrategy True North. We've got a crew tonight, a crew of 5, a little bit of a condensed crew, but we're going to get back at it and jump right in. We have so much to cover tonight. I mean, this is one of the craziest stocks. This stock has more things going on than in any other stock in the market, right? There's so many nuances, so many ways to look at this stock. You can look at convertible debt, you can look at equity raises, you could read SEC filings, you can learn about Bitcoin, you can learn about quantum computers, you can learn about collateral, banks, finance, ETFs, design of the market. Like there's so many things, game theory, strategic Bitcoin reserve, politics. You can learn about all of these topics. And all of these topics are very applicable to what's going on with the MicroStrategy trade. So without further ado, let's jump into it because we have plenty to talk about tonight. All right. So MicroStrategy, the price at close was $411.40. After hours, I think it's up to $412.01. And then what is Bitcoin at? It looks like Bitcoin's at 101.3. So continued green candles going into it. We've got more corporations adopting a Bitcoin treasury strategy. Semler Scientific is continuing to buy more Bitcoin. Metaplanet, Riot Blockchain, Mara. We are seeing miners adopt a Bitcoin treasury strategy, and this thing is continuing to pick up steam. So it is a ton of fun. All right. I'm wearing my MicroStrategy t-shirt today. Shout out the Hodl Shop. And I wanted to let everybody know that we now have MicroStrategy True North merch. And we are going to share a little bit more information on that. So
you want me to do the disclaimer?
Yeah, absolutely. Disclaimer. Hit the disclaimer.
Yep. So while the information presented may be amazing, it is not to be construed as financial advice. You are trading your own money, and you're the only one who can take that risk. So do your own research and all of that stuff.
Yeah, none of this is financial advice. You know, we're talking about how we think about the trade and things that we're considering when we understand, you know, our financial positions. And yeah, so let's get right into it. So True North merch, right? So, you know, we've been very conscious of not having kind of any sponsors and having a true ethos. But we've had a ton of demand for merch. Everybody kind of wants to get something. So we've partnered with the Hodl Shop. As you can see on the screen here, let me make it bigger. We've partnered with the Hodl Shop to do merch. There's just some really basic merch here. So we got some t-shirts, some long sleeve shirts, some hoodies, sweatshirts, and a little mug, the MicroStrategy Super Group Investment Club. And I please encourage you to read this little blurb here. So when you purchase anything from this collection, all proceeds are going towards sending kid analysts to the MSTR World Conference in 2025. We are going to, any profit that we're generating from MicroStrategy True North, we are going to put it back into the community in some way or another, whether that's going to be giveaways or sponsoring people going to MicroStrategy World in 2025, or, you know, whatever that may be. And we're, you know, focused on giving back to the community. This is not a grift. Like our portfolios are plenty. I like don't need anybody. You know, this is not a profitable venture, right? Like we've talked about, we're not making money off Twitter. The money we're making off Twitter is not worth it. We're just having fun having these conversations, and we'd have these conversations whether or not we are doing them live or not. So if you're interested in merch, it's available. Shout out the Hodl Shop. I know the crew over there has put a ton of effort and energy into, you know, getting this set up for us really quickly before holiday season. Shout out Colleen. She's helped us on the True North side of things as well. We've gotten our True North group is growing a little bit. So yeah, got a lot of positive things going on that front. And next topic, just going to jump into some really, really brief news that I think is pretty interesting. One, I live in the Pacific Northwest, but so this just came out today. So Vancouver City Council passes mayor's motion to make the city Bitcoin friendly. Somebody showed this to me right before I got on. I figured, hey, that's worth bringing up. I think this is really positive. I think it's really positive for Canada. I think it's really positive for forward-looking cities. I don't know if anybody's ever been to Vancouver, but it's one of the cleanest cities I think I've ever seen. Like all of the glass in the city is like the same color. It's pretty wild. And they've got the mountains in the background, and the sea is like around it, and huge Stanley Park and stuff. It's just like super cool city. So would be really cool if they take a Bitcoin friendly approach and a Bitcoin forward approach. So just some interesting topics that are topical. I mean, on top of hearing what we heard about the Microsoft voters in the board of directors vote, that was a pretty abysmal performance with 0.55% voting for 0.55%. So roughly half of 1% of Microsoft shareholders voted for the assessment of adding Bitcoin to their balance sheet. Just the assessment, not even, actually adding it to their balance sheet. And so, a lot of people were really focused on the result of that vote, because if there was more than 5% that were voting for that motion, then it can be brought up the next year without being automatically, shut out by board of directors shareholders. So I think it could be shoved out another 5 years for Microsoft. So have fun staying poor, Microsoft. And it opens the door for many other companies to potentially add Bitcoin to their balance sheet.
Yeah, the best part of that for me
it's crazy,
was that was such a low-key flex for Saylor, because I mean he got on the Bitcoin standard because Microsoft was eating their lunch, and he's like, okay, slow death or fast death. And now he's like reaching out a helping hand to to his former bully. Like and they're basically like, nah, no thanks. But that actually reminds me of you remember the end of Wrath of Khan, where they're like offering to save all the Romulans from destruction, and they're like, I'd rather die 1,000 deaths than take help from you. And he's like, okay, have it your way, and then he just lets them die. That's the way I see it. Like, 0.55% said yes. Like, oh, we'd rather die. Like, okay, die then. Go for it.
It's crazy. And I mean, if any of the other close competitors or anybody that's if Tesla adds more to their balance sheet, and their stock continues to rally, or Apple or Nvidia or anybody even the top 10, and the stock rallies, all of a sudden there could be a scenario where shareholders are going like, wait, whoa, like we want some of this stuff too. Or strategic Bitcoin reserve, right? Like the government adds $1 million to their balance sheet. This looks like the worst. This is the worst looking shareholder vote ever, right? It was pretty fascinating, and I wish we could get more detail into that, right? Because like Steve Ballmer has talked about Bitcoin a couple times. I think he owns Bitcoin. He's usually pretty forward looking, and he's got more voting power than Bill Gates, I think, right now. So, yeah.
Well, on Tim's most recent, I think it was his most recent interview, where they interviewed the guy, and it was him and Jesse interviewing him, and he said, even if it's a no, and he was fully expecting it to be a no, he just wanted a big number, because that would just it'd be like a positive sign. But he said that they've submitted proposals before that were just not approved, but then 3 months later they'll do what they were asked to do, even though they said no. So this could still plant the seed, and it could happen down the road. But I was wondering, I mean, if another company does it, and like you said, that they get a benefit from it, I mean, are they opening themselves up to even being sued? I mean, they sued freaking Tesla. Guy with 7 shares or something stupid was able to sue Tesla. But I mean, this would seem like a reasonable case. Like, hey,
shareholders,
we told you to do this, and you said no.
Yeah.
And you could have given us all this value.
Yeah. I mean, there might be something there.
Well, I don't think you can sue a company for not giving you maximum value. You can only sue them if they were being willfully negligent in their practices, and that was causing you losses. So that's just the way I've understood it. But you could be right. What if there was a shareholder revolt and they're like, we missed out on thousands of percent because you were being obstinate about adding Bitcoin to the balance sheet. I think that would be something really interesting to see if it was even possible. But because if it were, I think that we would have seen a lawsuit like that for many, many different reasons in the last like 15 years since the subprime mortgage meltdown, right? You have all kinds of companies that were making decisions that were just completely irresponsible. But 0.55%, that just blew my mind. I was hoping for 10,
Yeah.
5, but 0.55 is kind of like a fuck you. Like, we don't really want it.
It was.
But the thing is, we don't need it, honestly. Even if Microsoft put Bitcoin on the balance sheet, they're not going to do the Saylor move, right? They're not going to start issuing convertible debt and all that kind of stuff. I don't think so. I think that Microsoft, Nvidia, Amazon, Meta, them adding into the balance sheet will be more symbolic, if anything, and it would have upward pressure on the price. But I think our best bet for companies doing the Saylor Playbook is like companies that are MicroStrategy size and lower. I think Semler Scientific is going to be one of the ones that will follow the playbook pretty closely because they seem to have really bought in, and they seem to have conviction. And we'll see what other ones come along, honestly. But
Yeah, there's like a target strike zone, right? It's like
yeah,
500 million market cap to like maybe 10 billion. Like 10 billion is probably teetering. But if you were looking at, hitting the S&P 500 threshold, which is like $14 billion market cap, if you've been like struggling to get there for a long time, this might be something that's incredibly appealing, right? Like getting added to S&P 500 is like a huge impact on your shares and your credit quality, and it's a really big target and goal for a lot of these companies. So I mean, that's kind of a great target strike zone. Other than that, you've got so many constituents that you got to get to agree to some of this stuff. And Vanguard, is betting against it as hard as they can. So,
like, what was MicroStrategy's market cap when they started? I used to know.
$1 billion. It was like $1 billion.
Yeah.
Yeah.
So I had the right number. Yeah, and their market cap now is just ridiculous. So
yeah, they're 100 billion now. The other thing that was interesting about MicroStrategy when they first adopted the strategy, they gave all of their shareholders, because Saylor had majority ownership. So I think they did a Dutch auction and gave all of the shareholders that wanted out. They let them out, and they said, I think Saylor was like, "I'll buy your shares," and I think that's how it happened. I need to go back and recall exactly how it happened or find the story, but they gave all of their shareholders an out, and hilarious, man. If you were a shareholder and you sold at that point for $1 billion, you look back now.
Talk about a bag fumble.
Oh my God.
Right. Like that is a generational bag fumble.
Yeah.
That is on the level of, you had Bitcoin in 2013, you sold it because you thought it was a scam. And you had the chance to be in MicroStrategy, and you were like, fuck it, I don't want to be in it. That is just, how do you recover from that psychologically?
Think about it. If you had $10 million of shares at a $1 billion market cap, you'd be a billionaire. Right? That's crazy. That would, yeah. RIP those shareholders.
I want to chime in real fast on something.
Jump in, Grant.
Yeah, so look, we've seen this before, and I've talked about this before. So look, Amazon basically put Sears out of business. Microsoft did not believe in the internet. They were very late with their first Internet Explorer browser. Netscape took the beginning. Mark Andreessen, I just posted a video about this. Blockbuster could not see Netflix. They could not deal with this. We've seen this before, companies that have done this, and for whatever reason, the management cannot just understand that they are late and it is a problem. And so we've seen this before. And so again, we'll see this in tech. Nvidia doesn't see this right now because they're so focused on AI. They cannot imagine that the financial community is changing right in front of their eyes for a treasury asset that we've discussed here, what MicroStrategy is doing. So to all the people and all the whatever, if there's any CFOs of publicly traded companies that don't get this stuff, so be it.
Yeah.
We'll be just fine over here. We have enough holdings of MicroStrategy. We did a 10x. I'll probably do, maybe another 10-for-1 split early next year, and let Microsoft not vote for it. We'll just look at them when MicroStrategy market cap overtakes Microsoft.
Yeah.
Then we'll be like,
Right.
we don't care then if they vote for it. At
who
that
cares?
point, it will be their missing the whole thing. It also happened, it happened with all these large companies that go disappear in Silicon Valley because they just can't adapt to change.
Right.
So the one caveat with that I would say, and this is not to disagree with you, Grain, this is just to give like extra color. I think that Nvidia, I would almost say that they are outside of this consideration when we come to thinking about a company adopting Bitcoin to make themselves, more profitable and to get on the train, right? And that's because if we look at it in terms of technological epochs, you have Bitcoin is technology and finance, right? So you have Bitcoin, you have AI, right? I think those are the two ones that are really fighting right now, and then we're going to have robotics, and then I think after that we have nanotech. I don't throw quantum in there because quantum is just not viable yet, but we can get to that later. And the reason why I bring this up is because Nvidia doesn't necessarily need Bitcoin. They're going to go to 10 trillion, then 20 trillion without it, right? So in their mindset, I think they just don't care. Microsoft, however, that's different. Apple, that's a toss-up. But and Meta, Lord knows what's going on with them, really, because I think that they're the metaverse play costs them a lot of money, so maybe they are more skittish. But you also have Zuckerberg, who I think owns controlling interest, and he is a Bitcoiner, or he owns Bitcoin, right? He has goats or something named
Bitcoin.
named Bitcoin, right? So, so I think Nvidia is a little bit different because they're on an entirely different rail when it comes to transformation. The AI rail hasn't even started yet. People think it's overheated. We are maybe 3% of the way into how disruptive that's going to be.
We're in batting practice.
Yeah,
like it's not even like the game hasn't even started. Like this is going to wipe out hundreds of thousands of people's jobs,
and while creating all new ones at the same time.
Yeah. And
So
the
real mark is in 5 years when we have a full AI assistant on our phone. That's when everything changes fundamentally. And I'm not talking about ChatGPT on your phone. I'm talking about an AI assistant that's going to be watching your finances, going to be watching your metabolism, is going to be watching how much time you spend on TV, is going to be watching how much time you sleep, and it's going to optimize your life in real time. And it's going to then watch your stock picks and tell you, hey, you should really be investing in this, and this, and here's how it's going to make you money. We'll all have our own algorithms trading for us by then. That's the real game changer.
Right. So here's the real conundrum, right? Look, Microsoft, Nvidia, any of the Mag 7, they don't need Bitcoin. If somebody tells me, hey, that person over there's worth 10 million, you should talk to them about Bitcoin. Nah, they really don't need it. Someone's like, why would you say that? They already got 10 million bucks. They're probably doing pretty good. They probably own some hard assets. The person graduating college with $200,000-300,000 in student loan debt needs, the only way they can get ahead out of the negative net worth that they have is not by buying stocks, right? It could be the Mag 7 because they will do just fine. Nvidia, I'm only up 850% on my Nvidia holdings, but I have 100 shares of it. My point about this is that somebody that's already rich doesn't really need Bitcoin or MicroStrategy, although we will pitch that there so they could buy it. The real thing is the people or the companies that are struggling to keep up with monetary debasement and inflation, which are two different functions of the $8 trillion in printing. Go ahead, Jeff. I'll stop my rant.
No, I'm going to shift gears a little bit, but I think this is a good summary point here. One, Grain, shout out to you for understanding and like accepting and like thinking about Bitcoin. Also, I made a post about boomer bewilderment intensifying. I did want I did want to apologize to the boomers that I offended on this. But to be honest, I think if you're over 50 years old and you understand Bitcoin, you are not a boomer in my mind. You transcend time and space. So shout out to Alan who's 82 years old and holds Bitcoin and MicroStrategy and is using I think he has cold storage Bitcoin, and he's like a
I saw
master's.
his comment. Yeah.
He's a master's in economics. Shout out to that guy. Also, shout out to Howard. He's also an older gentleman that's very active in the community. I think was previously a psychiatrist. So older folks can get it. And shout out to everybody that's gotten it and understand and leaned into computer science. I wouldn't bet against computer science. Think about all of the top publicly traded equities right now. They're all computer based companies. And I wouldn't be betting against the computer nerds. Like, they're winning. All of them are winning.
I have a computer science background, so I can.
Yeah. I mean, I've got a finance background, but I'm leaning in.
I want to chime in because I'm reading some of the comments. This guy just made a comment that I know a whole bunch of Deca millionaires. Howard Wetzman uses his name. He knows a bunch of Deca millionaires that are heavy into bonds. Look, if you're worth 10, 20, 30 million bucks and 50% is sitting in the bonds, right? And you're 60 or 70 years old, I think you're good.
You're fine.
Your money will outlast your life. I don't care what magical drug they make. Your money will outlast your life, and you can give it to your kids or wherever you want to, and you're fine. Yeah. It's the young generation that needs to get ahead that needs it. And if somebody doesn't get that, that's exactly what we're seeing. The people that worked at the companies, I'm sure that the top 50 people at Blockbuster were totally fine. The top 50 people at Sears were totally fine because they were able to go ahead because they made so much money in a given year. Those people did not care or want to combat, which was displacing them and disruptively putting them out of business because they had enough money. They could be complacent, right? Or they could be apathetic. I use these words very clearly because I heard them. So the people at Microsoft, and for anybody in this call from Microsoft, they are apathetic and complacent to a monetary revolution that is going on that has now changed the balance sheet to increase the equity of a company. I'm using this very clearly. It does not increase the sales, the EBITDA, or the cash flow. It increases the equity of the company. The company's worth $3 trillion. They're DGAF. We don't give a fuck, right? Because they're one of the second or third largest company in the world.
Yeah.
I would like for them to buy Warren
Bitcoin.
Buffett.
What?
Same thing with Warren Buffett. I think the reason why he's
He doesn't need it. Charlie Munger doesn't
need it. He's the peak of apathy.
Yeah. Right. It's apathy. They don't get that they need to tell the message to the younger generation that's in debt because they're pitching to go buy something that they're thinking of was what they did 30 years ago to get rich, which is no longer applicable today.
It's so funny, right? Like, everybody brings up like the Ponzi scheme or it's a bubble. And then it's like, meanwhile, they bought their house in 1964 for a pack of raspberries and their, and their college tuition was $45, a year. And, shit like that. It's just like, okay, we're in a completely different environment. Talk about Ponzi schemes. Like, fiat is the Ponzi scheme, the real estate market where you've stored all this value and like you're technically like that's crazy.
Right. I want to address one more thing, and then we can jump ahead.
If the Bears, we're going to the Bear sightings.
Yeah. Look, folks. Look, if you think you're early, that ends on Friday at approximately 1:05 p.m. Pacific Standard Time. I'm on the left coast. Okay, that'll be 4:05 Eastern Standard Time. Please listen to me. If MicroStrategy gets triple Q inclusion, okay, if anybody says on Monday, we're still early, Facebook and Nvidia doesn't get it, I'm like, nah, you missed your first 10, 15x already, right? If it then doubles, I got a 30x, or everybody that got it the same time as me gets a 30x, and then that person begins buying. Yeah, you're late. As Michael Saylor already said, on January 11th, 2024, there's a gold rush started by 7 or 10 or 11 spot Bitcoin ETFs being approved. We have a change in administration. And if you think that you're going to show up on Monday, be like, maybe I'm going to buy 10 shares of MicroStrategy and think you're early, you're not. You're not, because the people on this call that have been attending this for the past 2 months right? To quote Adrian, hey, if you haven't tripled your money in the past 6 months, you're not paying attention. So if you show up on Monday and you think you're early, you're not. You have to play catch up. And instead of maybe doing a 5%, maybe the allocation should be bigger for you to catch up to what you missed on. I'll end my rant there and go get a
Yeah,
slice of
yeah,
pizza.
yeah. We'll jump into the catalyst in a moment, and I think that'll be a good conversation. We can talk about QQQ. I think it's 4 p or 5 p.m. Pacific grain. I think it gets announced after like all markets are officially closed, even after hours trading. So just as an FYI,
I don't know the exact time. It's going to be after market hours. And look, somebody will call me and be like, "Oh my God, you see the tweet?" And I'm like, "No, I didn't hit the refresh button yet." So anyway, when that comes out, and then you're like, I know it's going to happen. Somebody's going to say, "Oh, how do I buy MicroStrategy on Saturday?"
Yeah.
I guess you could buy it on Robinhood, but I don't have a Robinhood account, right? So then you're buying after hours after it already pumped 20%. So I don't know what you're showing there, Andy Constant.
Yeah. So this is we're going to go into bear sightings.
Sure.
I wanted to shout out to the community for participating in our bear sighting watch, and we're going to keep this going because this is so incredibly important, and the purpose of this is to identify that a lot of the people that are posting bear content here, it's just noise. It's just noise. Many of them have no financial position. They have no fundamental understanding of Bitcoin. They've never, moved anything to cold storage. They haven't done any research, right? No work, zero work. So I want to do a brief shout out, and we'll do this every week. So shout out to Kristen Kombucha, who called out this koala bear here. So while BTC and IBIT are up 5% at an all-time high, by the way, congratulations, holders. Did you notice that MicroStrategy is almost red on the day and down 25% in 2 weeks from its all-time high? Wow. Zoom out, right? This 3-month chart is killing me. It's only up, 100% and 200% in the last 3 months. So this stuff doesn't scare us. And we're going to keep on. We're going to do a couple more. So obviously, the All In podcast, right?
These fucking guys.
Jesus. Jason Calacanis, we got to be one of the biggest biggest dum-dums I have seen in modern investing finance. So these guys are all koala bears, right? Like they're talking about it. They hate it. They have no position in the race. They're not long. They're not long MicroStrategy. They're not short MicroStrategy. They haven't done any research. And it's funny, this clip that's shown here, this guy that's speaking right now, he misses the debt number, like the debt service number by over 100%. He like overstates their debt by over 100%. He hasn't done any research. Very clear he doesn't understand that they're convertible bonds. Very clear that he doesn't understand that they're not collateralized, they're not secured. So these guys are koala bears. They're making noise. They get paid for doing this. They get paid for going on and doing these shows. They've got hundreds of thousands of followers. They're actually making money from doing this stuff. So
when they asked him the question, he should have just said pass.
Like he even admits it. He's like, I don't know. He's like, I don't care about this. I don't know how anybody who's close to finance isn't at least remotely interested in this. This is the biggest story in like corporate finance history. Right. And it's insane to me. So anyway, shout out to Kier, Retire Juan 4394. Thank you for the koala sighting and appreciate it.
But it's also like, where have they been the last 2 years?
Right.
Saying that they don't care about this thing. It's like, so you don't care about it after the market cap went up by 100x?
Right.
That doesn't like, set off a little bit of alarm bells in your ears to maybe pay attention?
Right. It's crazy. It's crazy. We're going to the next one. Shout out Andy Archer for the True North bear sighting here. This is Michael Leibowitz, and this one's so funny. These guys they're all so funny, and I love that people are calling this out because I've found so much more bear content, and it's just been so laughable. And somebody puts here in the comments, koalas should be muted. I can't stand hearing their FUD. This is a great piece of advice. Like you can easily mute these people because they're just going to be noise from here on out. I've muted hundreds of people. I've blocked, 20, 30, 40 people. And it's super easy to do. Just press the mute button. You never have to hear from him again.
Hey, I have a little bit of a contrarian view on this.
Go ahead.
I'm actually cool that these guys think this. I hope, like Michael Saylor says, I hope that some hedge fund reads this.
Yeah.
Okay. And we all know what happened with Gabe Plotkin and Melvin Capital with GameStop. You know what? Some hedge fund is going to read this. They're going to believe it and they're going to short it. And I hope that somebody takes the other side of the trade. And Michael Saylor said that, and I've been hoping that. So take the other side of the trade, whatever hedge fund is listening right now, whatever, I know there's got to be something, one of these guys on the call thinking, what's going on? I dare you, take the other side of the trade. Just do it.
Yeah.
Okay.
With leverage.
Howard
With
West.
leverage.
With leverage, please.
Please do it. Believe those guys and do it. And you think I'm a loudmouth? Sure. Put your money where your mouth is, short it, and let us know how it works out. And you know what? Contact myself or Jeff, right? And we'll let you join this MSTR True North, and you show us the receipts that you shorted for more than 100 mil. If you can, I will do a space with you if you show me the receipts that you shorted for 100 mil. Put your fucking money where your mouth is. Okay,
Yeah.
I'm done.
Yeah, I mean, it's so true, and that's again the point of this, right? Like, you're just noise. Unless you have money going against this, and you're short it, like, you're just noise. If you're buying puts, that's not shorting it. Like, you're taking a speculative hedge position. Like, if you want to bet against your FUD, go short and go against the longs. I think the longs are going to win. Anyway, the funny part here, right, is like, not bad for a company that's lost money for the last 2 decades plus, which is hilarious, right? Like, they don't know that there's an accounting change. Like, there's an accounting nuance here where the Bitcoin is treated as a long-lived intangible asset, and they had to mark down their Bitcoin since they adopted the Bitcoin strategy. Look, it's very clear. Like, what happened here? You literally have to ask one question: what happened? And then you go down that rabbit hole and figure out, oh, there's a change in accounting. This should actually be almost completely inverse and flip the other way with multiple billions of dollars of net income. And we'll find that out in 2025. So,
yeah, by the way, hey, I got to
crazy.
chime in again on my rant. Hey, Donald Trump Jr., everybody posted that latest video of him where he said he's known Michael Saylor for 20 years. I'm glad he has. But he also said in that same video, well, if I can't touch it, it isn't real. You know what? I get that your dad made a bunch of money in real estate. It was really actually Fred Trump. I get that real estate you could touch. I actually get that you could touch gold. I truly do. But besides Bitcoin, there are other intangible, some of them are not indefinitely lived assets. And people are like, what would those be? I'm like, did you ever hear of a patent? Did you ever hear of a trademark? Did you ever hear of a copyright? They're like, oh, really? Can you give a good example? Oh, how about the Beatles sell their song collection, the rights to it, for like $1 billion? Oh, I never heard of intellectual property rights. Why do you think the companies build up a war chest so they could sue other companies for that? And so if you never heard of intellectual property rights, and the fact that I'm having this conversation is you're not very successful because you don't know what's going on, right? When you buy the house, hold on, I'm not done. When you have a house, right? Somebody sits inside it, they're squatting. But what gives you the ownership rights to that, and somebody's like, oh, you got to pay taxes, is the deed to the property, which is then registered in the county as you being the owner. Just merely sitting inside of a house does not make you the owner. I know there could be squatters, but what they don't understand, people that are so unsophisticated, is that it's the piece of paper, right, which is just a representation of your rights. That's the important part, right? And if anybody's a lawyer and be like, oh yeah, this Grain guy, he's actually right. And so that's where you have a lawsuit, which is on paper versus the actual physical item. So Bitcoin, you can't touch it. I'm okay with that.
Yeah, I mean, that's something that a lot of the bears don't get, right? They haven't done a transaction on the Bitcoin ledger and moved Bitcoin to cold storage. They don't get that it's programmable. Like both of those events for me, with learning those things, like doing a cold storage transaction, like walking around the block holding a Bitcoin in my pocket, then realizing that all I had to do is hold it in my head. I could hold that money in my brain. It was like so illuminating. And then also, I learned last summer that I knew it was programmable, but I didn't know how. And I watched it. Like somebody gave me a rundown. Shout out Rob Hamilton, right? Rob Hamilton gave me a rundown of how a Bitcoin can be coded, like how you can code a multi-sig transaction within the Bitcoin ledger, which is crazy, which is just totally crazy. And it's like these people don't get it, right? Like they use the correlation, right? Real estate, like or this is a real estate bubble, or this is the .com bubble. Well, like, okay, .com bubble, like anybody can buy domain names, right? Everybody listening to this call, like the people on this call and the people listening to this call probably have 100 MicroStrategy domain names, right? Like their domain names are infinite. You can buy infinite ones of those. Houses are, there's not infinite land, but there's plenty of land. People are building more houses all the time, and they're just decaying, and you get taxed on them. And they don't understand that this is a finite asset that you can program. Like you can create you can create programmable escrow accounts. Like boom, just get rid of that industry. Done. It's like, it's amazing to me. They haven't researched it at all and looked into the technology, which is just crazy to me. So I think we're going higher. People have to learn that, and they have to like remove their egos. This is I was talking to my uncle, and this is he brought up the whaling industry in the East Coast, like way back in the day. Like all lamps and lights used to be powered by whale oil. So like the whaling industry used to be huge. Like these ships would go out and they'd kill whales, and then they would strip all the oil out of them, and they'd use that oil, that like sludge, for lights. And then all of a sudden Rockefeller comes along with Standard Oil and processes the oil in a different way. And all of a sudden the whaling industry is, evaporated in a year, right? It's gone. Like this is a paradigm shift, and people don't understand the complete paradigm shift, which is fine. I mean, like I get why the term "have fun staying poor" became popular, and people started saying that over these past Bitcoin rallies, because some people just aren't going to get it, and they're not going to put in the time. Like to Grain's point, maybe they're sitting on $20 million and they're 60 years old, and like Bitcoin is going to, hit its peak when they're gone, right? Like there's a timing component of all this stuff, and it's crazy. So anyway, we've got one more bear we want to walk through, and it's this DJ Quantum guy here. Shout out Michael Sullivan for having this little interaction here with this DJ Quantum guy. MicroStrategy and Saylor have a history of fraudulent activities. Altcoins will never be obsolete. And then, he said something else, pulled some District of Columbia tax fraud lawsuit, which is not a tax fraud lawsuit, but, and what's he say? Like, I'm getting bored with this conversation. So
with all that kind of stuff about tax fraud and all that, once you cross a certain net worth, I think by default you have to have a lawsuit against you about taxes, because every person I've ever met that has a net worth over like 50 million, they've all had issues with the IRS and with lawsuits, just because I think they start looking at you a lot harder, and they start to find ways to take your money from you. So if someone's rich and they don't have issues with the IRS, I almost don't trust them.
Right. And the issue was that he lived in multiple states. He lived in Virginia and he lived in Florida. And it's like, well, yeah, I mean, Virginia got pissed off that he wasn't paying tax and that he had a $1 salary. They're like, we want our property, we want our taxes. And it's like, well, I pay a $1 salary and I actually live in Florida. So, which has no income tax.
Anybody that lives in the tri-state area, meaning New Jersey, New York, and Connecticut, knows that they have, on the state level, they have to approximate the number of days between this not tax advice. But anybody that lives in that area knows that as they earn their money in different states, they have to do it proportionally on their taxes. But if you only live in one large state, you're not aware of this. The other thing is that Shakira, I forgot, I believe it was Spain, was going against her, because wherever the high tax jurisdiction is, wants to
I
get those
remember that.
tax.
Yeah.
So this happens a lot, and you fill it out and you're in compliance with one state but not the other state, because then it becomes how many days you live someplace. And then the bears point this out. Oh, he's a scam. You know what? You just don't have enough money to do what that guy does, and you're a little bit salty about it.
Well, what I love about the bear sightings is it's the community that's going out and curb stomping these bears. You know what I mean? Like, there's not enough time in the day for just the True North, to be out there handling all these bear sightings.
Yeah.
And it's like every single member of the community is like a node on the network, and they're verifying transactions.
Yeah.
I just love that aspect of it.
Absolutely. And keep it like, this is going to be the most hated rally of all time, because people are not going to get it. And it doesn't matter anymore. I mean, kind of to Grain's point, right? Like, you're kind of late. The ETFs are here. And once the ETFs are here, I mean, those things are buying relentlessly, and they don't care about the price, right? And that's probably 70% of the population, maybe, that are investing in their 401ks. Right, these are corporate zombies investing in their 401ks forever in perpetuity in these products that they have to invest in, and they can't buy these other things. Then you've got pensions and insurance companies that have to fit within regulations. You've got banks, all these things. So yeah, I mean, the ETFs, it's going to continue to be hated, and it's going to be hated even harder. And it's funny because everything that these people hate, we've already talked about for over a year. So it's like, all right, we've already figured all this stuff out. Like, everything that everybody's brought up, like, I haven't been wowed. Not one time. I haven't been like, wow, that's novel. It's like, no, you're recycling some shit from February, which is just horrible.
Yeah, and even the best bear cases that are put forth, they just end up listing a traditional risk associated with an equity. And so, like,
yeah, right.
And it's like, well, yeah, that's investing, right? Like, that's taking on counterparty risk. That's putting your money out there to try to generate a return. So I think I actually like seeing the bear cases and the bear sightings and stuff. I don't mute any of them because I do like rethinking my position, as Ben Workman says a lot. But these ones do seem a bit ludicrous. It's like, okay, yeah, we've talked about that, and that seems a bit salty, right? But then even some good ones, it's like, well, there could be an extended Bitcoin bear market that goes on until the convertible notes come due. So like maybe, whatever that is, roughly an 8 to 10 year Bitcoin bear market. And if that happens, like, things are, that's a different conversation, but things are truly wrong or have gone wrong.
Right. People love to just bring up regular risks or say that it's a Ponzi, that early investors are going to get paid more. It's like, well, no shit.
Exactly.
Like, no shit. You bought Amazon at $5 billion, and it's worth $3 trillion. Guess who got paid more? The people who bought it when, like, they didn't know what it was, when they said the company was going down because they were shoving all their money into R&D, and they were using a cute little accounting trick too. Right. Like, this is a very similar situation. And, at the end of the day, I don't want to be like, I missed the trade on Apple. I was too young. I missed the trade on Amazon. I was too young. I missed the trade on Microsoft. I was too young. Nvidia, I kind of got in on it. Tesla, I kind of got in on it. GameStop was fucking crazy. I'm not going to tell my grandkids that I missed MicroStrategy. Like, I'm not going to be the one like, oh, I had the opportunity to buy MicroStrategy at 20 cents. After 4 stock splits, and I didn't. And it's like, oh, cool, Grandpa, like, you're that guy.
This is why I'm eating beans.
My robot is feeding me beans in my cell while I play video games. Who knows? Or like, you've got your Meta glasses on or some shit. Anyway. I digress. Let's jump into Catalyst. Wow. Yeah, we've got a lot of things to cover here. So we are just cooking. I'm going to pull up my screen. We're going to jump into Catalyst because these are important. Okay. QQQ Inclusion announcement. So this happens on Friday. This is Friday, December 13th. Strange that it's a Friday the 13th. Hopefully it's a good Friday the 13th.
It will be.
Knock on wood. So we've got an initial announcement from Bloomberg that MicroStrategy will be included in the QQQ. I guess it was a Bloomberg terminal that was indicating companies that looked like they were going to get included by the criteria and associated dollar flows that go into those funds because of that criteria. So that was a positive signal. I think there's still a little bit of uncertainty about them being classified as a financial company. I think that's pretty much out the door, right? Like many people have talked about this and showed how they're classified by I think it's the ICB, FTSE, and they're a tech company. They're classified as a tech company. But if you go look at Coinbase, Coinbase is classified as a finance company. Coinbase is not being looked at for inclusion. MicroStrategy is. So I think that's a very exciting announcement. Everybody's asked, will that move the stock? This has been front run. It is being front run. Everybody's front running everybody all the time. I have no idea which way the stock is going to move. I think this is a bullish indicator for the stock in perpetuity. And I think there's no better opportunity cost of capital at the moment to sell into these passive flows. So I think the very strong holders here in this scenario are going to be holding much longer than QQQ inclusion for FASB fair value accounting, all these other catalysts that we're about to roll through, right? And I think it's going to be a bullish indicator for the stock moving forward. Now, what do we know, right? Like Saylor still has $9 billion of ATM left, so there's likely going to be pressure from the ATM at least through the end of the year, which may damper those impacts. Go ahead, Adrian.
Oh yeah, one thing. So in general, based on my research, inclusions typically cause a 3 to 7% stock price increase near term. And when I say near term, we're talking about a quarter. So and that doesn't mean it's not bullish. So before anyone in the chat gets all squirrely, all that means is from in a quantifiable sense, 3 to 7% is what you're looking at. However, long term, it's much, much larger, and we can take a look at all kinds of different companies to show that case. So everyone needs to stop worrying about, oh, is this bullish? Are we going to jump 20%? Blah, 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 blah. I don't think that's important. MicroStrategy might be the one stock that just might. Then again, it might do 20% in 2 weeks. So does that mean it's less bullish? I don't think so.
Yeah. If you have short-term call options, we're not recommending anybody buy any call options. I mean, this thing could be really volatile in both directions, right? Like you can get absolutely crushed. So I wouldn't get too overzealous thinking that, this QQQ conclusion announcement is going to result in like a 100% pop. Like
I agree.
We just don't know.
And you could be right about the inclusion, but wrong about the direction. So you literally can't play this.
Yeah,
Mm-hmm.
yeah, it's pretty.
You have to be right about inclusion and then right in the direction, and you don't know either for sure. So like,
yeah. It's a bit crazy, and yeah. Oh, one topic that did come up, and it's come up in the community a lot. Like everybody looks at S&P 500 inclusion for Tesla. I bring up Tesla a lot because I think Tesla's the only similar proxy for QQQ inclusion and S&P 500 inclusion for something with a technological moat that many people, it had a cult following, and many people understood what the long-term direction was before the masses did. And this is a very similar situation. We've got a very strong core of holders that understand Bitcoin before the masses do. And so these people that generally hold the stock are holding it long in perpetuity, thinking about the catalysts that are on the horizon for 2025, strategic Bitcoin reserve, bullish Bitcoin, just period, moving forward. So I think Tesla is a decent comparison. Now, people have sent me this video of it's the same interview of the S&P 500. There's a question on whether Tesla being included in the S&P 500, the inclusion date was going to lead to a stock increase. And it's so silly because everybody has the same information, right? Like all of the information that's publicly available on the internet, everybody has that information. So the final piece, the final criteria that Tesla needed to be included in the S&P 500 was 4 quarters in a row of positive earnings, or 4 quarters in a row summed together. Tesla had their 3rd quarter in a row of positive earnings in May of 2020. At that point, everybody was speculating they're going to have 1 more quarter in a row of positive earnings in July, and they're going to be qualified for the S&P 500 and get included. So what happened from the stock? If you go look at the stock from May of 2020 to December of 2020, when they were actually included, everybody and their grandma front run that stock because they knew that the inclusion was inevitable once they hit 4 quarters of positive earnings. And this was a really controversial topic because they were the largest company that was added to the S&P 500 ever. I think they were included at like a $300 billion market cap, $400 billion market cap. Most companies are included around a $14 billion market cap down at the bottom. So this was a very unique situation, and it caught a lot of eyeballs. So I think we could be in a similar circumstance here, and we are with QQQ, right? Like, not many companies, when they get included in QQQ, they barely make it. Not many companies go up to top 50 or like top 40 equities that are included in these ETFs. So we're in a unique circumstance. I think there's going to be perpetual buyers on the horizon, right? If they get included in QQQ, the reason this is so big is that Bitcoin is now in QQQ, right? That is a huge benefit for Bitcoin. Bitcoin is now in QQQ. It's not even MicroStrategy. Like, Bitcoin itself is now a factor in QQQ's performance, which is going to be attractive to other investor bases as well. So we're on to some cool stuff on the horizon with the QQQ announcement. And, even if it doesn't get included for whatever reason,
Doesn't matter.
It doesn't matter, right? Like, look at where their market cap is today without being included in QQQ or the S&P 500. Right. Guess what? Like, they're still included in the Russell 1000. They're still included in an MSCI World Index. They're still included in 200 other index ETFs. And guess what? Like, those are also passive ETFs that are market cap weighted. So if the price of Bitcoin goes up, it doesn't matter if they're in QQQ. It doesn't matter if they're in the S&P 500. It's going up. Just like, it's the design of the equity market. And that's, again, where many of these bears, they don't understand the design of the equity market. They don't understand who the players are. They don't understand the playing field. They don't understand that, Bitcoin is finite and how that impacts the game theory associated with all these things. So, man, it's
Saylor
cool.
even said it himself. They were asking him about it, and he's like, I don't know, if we get in, it's good for us, but if we don't, it doesn't matter.
Fine.
Because
we're going to be fine.
We got where we are today without it. So
yeah,
it's no big deal.
Like, they raised, okay, you know what? Actually, I'm going to bring this up because just while we talk about catalysts. Okay, just in Q4 2024, MicroStrategy has raised $15.6 billion. $15.6 billion. Do you know how hard, I've said this on MicroStrategy Mondays. I think I said this last week. Do you know how hard it is to raise $100 million? It's really hard. You have to have a really good idea. They just raised $100 million 156 times in the last 40 days. Right? Like, think about that. That is like incredible. And 11.7, let's see, hold on. What is that? 12.6 billion of it is ATM, which is permanent capital. That's debt. Like, that doesn't have to be repaid. That's $12.6 billion of permanent capital now on balance sheet, which is just incredible. And if you look at how that impacts their financial leverage, I mean, if you look at the leverage at the end of the year in 2023, they had a 31% leverage liability to asset ratio. As of today, at $101,000 Bitcoin, that's a 17% leverage ratio. I mean, in order for this thing to blow up, even like the price needs to go down at least, the price of Bitcoin needs to go down at least to $17,000 and stay there for an extended period of time. If that's the case, that means something probably happened with, one, the internet, two, like global war, or, Bitcoin's dead and you better have guns and ammo and fresh water and a garden where you have food. So, like, it's insane.
Yeah, Bitcoin at 17K is like an Armageddon scenario. I don't mean little Armageddon. I just mean like financial Armageddon. And people are always just like, oh, MicroStrategy is dead by then if Bitcoin crashes, blah, blah, blah. If Bitcoin crashes, it means a lot of other things have crashed. So I think that'll be the least of our concerns at that point, quite frankly. So
Right.
it's a case that I don't even consider, because just like you said, at that point, it's shotguns and butter. Who has it?
Yeah, you got to love some classic Guns and Butter econ references. Absolutely. Guns and
Seriously.
Butter. Yeah. It's hard to fathom, right? Like that's a black swan negative scenario, and yeah, hard to fathom.
And the whole thing about a black swan is no one sees it coming. That's why it's called a black swan.
Right. You
Stop
can't
using them as bear cases.
a black swan is not a bear case. Yeah, it's
Yeah.
a 0.0001% chance, or a 0.01% chance, a 1 in 1,000-year event, 1 in 2,000-year event. It is on the probabilistic horizon, but it's like, I live in the Pacific Northwest. The 9.0 earthquake can happen tomorrow and wipe me out. It's like, I'm done. Like, who cares about my equity account? Yeah, go ahead.
Not gonna stay there.
Guys, look, there's a black swan event every 4 years. They put Nicholas on TV. They talk about it. The internet bubble popped. You had you have long-term capital management in 97. You go through, you have the Russian default. The country of Russia defaulted on their bonds. How can a sovereign nation that produces oil and minerals default? You've got the 2008-9 real estate bubble in the United States that crashed, which caused a massive, huge once-in-a-lifetime event. Every time we've got the FTX Luna scandal and bubble crash, which caused in 2022. I have lived through so many once-in-a-lifetime crashes. It's amazing because I get richer every single time after it, because we're never going to recover. Everything is horrible. I'm like, looks like there's a lot of good assets now that are on sale. And so this keeps on happening every 4, every 8, or every 12 years. And if your cycle is you're young and you haven't been paying attention, that's okay. But they will parade these. They'll parade these. Oh, is this a black swan event on TV? You gotta love when CNBC is markets in turmoil.
Yeah, you're like, okay, that's a buy signal if I've ever seen one.
Right, that's your buy signal for that, right? So I've seen lived through so many once in a lifetime events, and they seem to happen every 4 years. So yeah. I don't know.
I'm going to bring this one. You have to consider the possibility of Satoshi moving the first act, which I think is funny, right?
Oh.
That's a bear. We got a koala bear in the chat, right? The Satoshi stack is really proof of security at the moment, and even if it did move, if it did move at all, like, it doesn't matter anymore, right? Like everything's in place, everything's moving, right? Even if it didn't move. One, I think that computer and those keys are at the bottom of the ocean somewhere, or just completely evaporated, gone. But that's probably a conversation for another time. Anyway,
hey, quick point on that. I don't know about talking like black swan events. I remember 2 years ago. You guys can look it up on the internet. There was a tie at the end of a block for Bitcoin.
Oh yeah,
it did not get resolved. If you go to the last page of the white paper, there's 7 tiebreakers that it goes through. Somebody's like, oh, well, after the 7th tiebreaker, what happens then? Mathematically, it is almost impossible to go beyond the 7th tiebreaker. But it was only a 1 tiebreaker that happened, and that happened 2-3 years ago. And I don't know, so I'm sure somebody will chime in. It's happened X number of times since the start. But these events happen, and then Bitcoin sold off, I don't remember, 20%. Oh my God, what happens if there's a tie? And then Adam Back chimes in. Go to the last page of the white paper and you'll see the formula for the tiebreakers. So jump to this. Cool. Thanks.
Awesome, Grain. Back to Catalyst. We're jumping around. Sorry, everybody. But there's been a lot of questions. Actually, I think it makes sense when looking at financial leverage and then going back to what's going on with Catalyst. A lot of people have asked, why haven't they announced another convertible bond? And we've got a December Fed meeting on the horizon in, what is that, like 7 days, right? So this Fed meeting, there's another possibility of reduced interest rates, maybe 25 basis points. So if the interest rates are dropped by 25 basis points in 7 days, it doesn't make sense for MicroStrategy to go out to market with convertible bond now when they can get better terms in 7 days. If the opportunity cost of capital drops, it's better to wait 7 days and issue more favorable bonds for the market. So Yeah, I think that is a bullish catalyst on the horizon. Thinking about the future Fed funds rate going down, opportunity cost of capital going down for the market, which allows for more debt capabilities to add to balance sheet. Obviously, we've got other catalysts here. January 17th, 2025, historic options expiration. We're going to talk about this in the Q&A a little bit. Presidential inauguration, that's January 20th. We've got a January Fed meeting, which could be another interest rate reduction. We've got a change in the SEC, FTC, Federal Trade Commission. We could see some very positive crypto-related movements very quickly in early 2025, just with roles in those positions. Politically, we could see movement on a strategic Bitcoin reserve. There's this other one here. FTX estimated $16.5 billion repayments sent to customers at the end of January 2025. Q4 24 earnings report coming out in February of 2025. We think there will be likely a blackout period at some point before the Q4 earnings report on February 9th-ish. We don't know exactly how long that is. I think historically it's like 2 to 4 weeks. There's been a lot of speculation on that. It's not very clear exactly how long the blackout periods are, but in blackout periods, generally ATM issuances aren't allowed if there's knowledge of material non-public information. So that is within the SEC filing. You could go dig that up if you're curious and you want to read through that stuff. Then we've got MSCI quarterly rebalance, quarterly review, Russell Index rank day, which they're going to be ranking higher in the index. I think they've quadrupled their ranking within the Russell Index, at least since April, as of today. I think it's around 25 billion to about 100 billion where we are today. So that would be bullish, assuming there's no change in market cap, from here on out. MSTR rolled in May, Q1 earnings, which we think will be the first adoption of FASB fair value accounting. So if we see a change in Bitcoin price over Q1, that we'll see that flow through to net income as of Q1 2025 in May. So the point of showing this every week is that there are so many bullish things on the horizon, and there are so many things that are going to happen in 2025 that will be bullish for Bitcoin and potentially MicroStrategy as well. So for me personally, the opportunity cost of capital is really high to move it anywhere else, because sitting in this trade, I see all of these things as I want to participate in the stock while these things happen. I think these are all very interesting things to be a part of MicroStrategy history. So all of them add to more pressure that's buying shares at the margin for MicroStrategy stock, which is how any equity is valued, is what shares are trading at the margin. We got Tad Smith here in the comments. I love it, Tad, that you're involved. 4-week-long earnings blackout is pretty standard for a serious public company. Beautiful. There we go. Bullish MSTR. Perfect. Okay, so I think that's all I've got on Catalyst. What else do I have here? Oh, statistics. Just a little bit quick update on statistics. Irresponsibly Long has now hit 21,500 members, and we continue to grind higher. I think there's been a lot of noise in the Irresponsibly Long community. Please, post cool stuff in there, right? Like post memes, post videos, ask good questions. Don't ask if Saylor's tapping the ATM. He's using it literally every single day. Don't ask stupid questions. Get involved in interesting posts. Speaking of that, I think I've got this post here. Shout out Richard Haas, who's put out implied volatility charts. Keep doing this stuff. Independent research is very valuable, and please promote these types of things. This is really good content that is very valuable to everybody that's owning the stock. Okay, I'm gonna take a pause from talking for a bit because I've talked for a while, and I'm gonna pass it over to Adrian because quantum computers has come up this week. This has been a thing. Shout out Google. Shout out Google for making everybody think about Googling what is a quantum computer. I know there's been a little bit of FUD about quantum computing hacking Bitcoin. There's very, very low likelihood that happens, and it's going to take a very long time based on just the math associated with it. So I asked Adrian to prepare a 5-minute little overview of quantum computers and its impact on Bitcoin so we can get a cohesive understanding together and maybe take this conversation somewhere in the future.
Yeah, so this is a highly theoretical conversation, so I'm going to try my best to keep this condensed. I can go on a rant for about an hour about this because I've been hearing this shit for 10 years now. So when it comes to quantum computers, at the very, very base level, what you need to understand is this, and I have some talking points here I'm just going to read off, right? So if you think of a traditional computer, everything with code breaks down to zeros and ones, okay? So that's considered base 2. Now, the base 2 binary system breaks everything down into something called a bit. And there are two possible states or expressions of a bit, which are expressed as 0 or 1. And computers use these patterns of zeros and ones to perform calculations, right? So there are 2 to the second power or 4 potential expressions of a bit pair of 0 and 1, and that's going to be 0, 0, 0, 1, 1, 0, and 1, 1. This is very important. There's a reason why I'm going into this level of detail with it. That gives us the ability to represent 4 distinct numbers. Now, in computing, bits are combined to make bytes, which are 8-bit strings strung together. 8 bits strung together, right? So when you have this base 2 system.
So 8 bits is a byte.
Yes, eight
Okay.
bits is a byte. And I'm trying to make sure that I'm saying this correctly because it can get very
I'm following.
So we leverage this base 2 system of bits to make bytes, and you have the ability to represent 2 to the 8th power or 256 unique values with bytes that serve as the base computational layer for everything that we know of computers, okay? Now, a quantum computer, since it operates off of quantum mechanics, instead of being 0 or 1, it can be 0 and 1. So with a classical system, you have, the potential for 256 unique values that can be represented in an either or state. With a quantum computer, theoretically, you can do all 256 at the same time. Now, this is where things get confusing. So I'm going to try to say this. I'm going to try to use a simplified example. If you were to flip a coin, you have one of two outcomes. You have heads or tails. And any kind of probability you do on that is always going to be 50%, right? It's either going to be heads or tails. That's because obviously it has a set outcome. When the coin hits the ground, it is either going to be heads or tails. With a quantum computer, it can live in a state of superposition and quantum entanglement, where that heads or tails can be expressed at the same time. And only until a calculation needs to take place does it come out of that state, which is breaking something called coherence, to have an outcome, to actually say that it is now heads or it is now tails. So this is where I lose people. So I'm going to try to say this again. Classical computer, either or. Quantum computer can be both. 0 or 1, 0 and 1, represented at the same time. And that's the quickest and simplest way I can explain it. Why people think this can hack Bitcoin. Here's, and I'm going to try to not get angry when I say this because it's so annoying. All right, so because of the hashing algorithm or the elliptic curve, right? So you have hashing that does the actual hash on the blockchain and that's going to be that's quantum resistant. So we could come to that in a second. What everyone likes to focus on is the elliptic curve. Okay, so the elliptic curve is going to break out to, and it's a ridiculously high number, which I'm not even going to manage to state here. But basically, because the quantum computer represents a 0 and 1 instead of a 0 or 1, it cuts the computational time in half to crack elliptic curves, theoretically. Okay, this is all theoretically here. Now, why is that important? Well, because with a classical computer, which is a 0 or 1 based system, it takes something like 550 undecillion, 110 1 like the numbers are so ridiculous that basically you're going to the end of the universe in order to be able to crack it in terms of computational time. A quantum computer cutting that in half is the first step. The second step is that elliptic curves are theoretically vulnerable to a kind of mathematics called factoring. So you're not just doing a brute force attack with a quantum computer, you're doing a factoring attack, which speeds it up even further in terms of computational speed. We don't have to get into what factoring is. We can do that another time because I'm just going to lose everyone again if I try to explain that one. Okay? So what you just need to really focus on is, because of the way the quantum computer is set up, the way its basic structure exists, it cuts computational time in half just based on its structure, theoretically. And then these algorithms can be used, one of them is called Shor's algorithm, can be used to use factoring to hack someone's private key and get into their wallet, right? That's the theory behind it.
And factoring is running just tons of simulations very fast and testing them to see if that is a key that has a wallet that has Bitcoin in it.
Yes and no. What the factoring is doing is it's doing a hyperspeed theoretical brute force attack on a potential series of combinations to essentially decipher what a private key would be. Then it's just a matter of finding the wallet for that private key. Is the best way I can describe it.
Okay.
So here's where things get really, really, really confusing again. If you're using theoretical algorithms, if you're using a quantum computer, how does that even work practically? What is the step from going from a quantum computer to cracking someone's private key? Well, quantum computers need to exist in a state of absolute zero. That's the room temperature they need to be at to operate on. That is one that is derived from electrons, however. So an electron-driven quantum computer, and they use, by the way, subatomic particles, so electrons to explain what the bits and the bytes are, that needs to be at absolute zero in order to run. If it's based on a positron, it can theoretically be at room temperature. Again, we can talk about that another day. So one, you have absolute zero, typically, where it needs to run. That's the first thing.
Like cold as shit?
Yeah, absolute zero is the coldest.
It's just cold as shit. Yeah.
Yeah,
Okay.
there's nothing colder than absolute zero.
Yeah.
If we were in absolute zero right now, we would instantaneously freeze and shatter.
Yeah.
Okay, so that's what the temperature needs to be. All right, so the reason why I say that there's zero threat is multifaceted. I haven't even gotten into the real details of it yet. I'm just trying to give a very, very high level overview here. You have a quantum computer that needs to exist in absolute zero in order to work. Okay, fine. Then you have the problem of essentially noise with the regards to how the quantum computer even does calculations. If something is a 0 and a 1, how do you keep it in that state to do calculations until the calculation actually takes place? Well, because of the way the quantum computer exists, being in 0 and 1 is inherently unstable. And because it's inherently unstable, you have to create a structure that allows it to become more stable. You need to use something called qubits, which are quantum bits that allow the quantum computer to remain in that state without destabilizing. And in order to have it scale, you need more and more qubits. So if you have 0 and 1, you're going to need a series of qubits for 0 and 1, and then you're going to need a series of qubits for the calculations that are done for 0 and 1, and so on and so on and so forth. It is basically a perpetual problem. What Willow is supposedly doing is it's found a way to handle this problem of noise more effectively, and it's done calculations that a traditional computer would have taken millions upon billions of years to do. Okay. The problem is that Willow is doing this on quantum algorithms, so it's inherently designed for a quantum computer. Or to give a simplified example, that's like you telling me pick heads or tails for that coin toss I was referring to. However, it's a loaded coin. That's always going to fall on heads. That's essentially what they've done. They set up a loaded test in a quantum state environment, tested Willow on it, said, look how fast Willow did this, and a computer would need to have taken billions upon billions of years, which is not a valid test in my mind. And I'm seeing all the comments coming up, and I'm trying not to laugh because they're kind of
They're funny.
But so this very long-winded soliloquy is just to let people understand that for a quantum computer to be a viable threat to Bitcoin, it needs to be able to do a brute force attack on an elliptic curve that will represent more atoms in the known universe. Even if you cut that in half,
More atoms than the known universe. Okay, so the universe is pretty big.
Yes. Yes. So to be a viable threat to Bitcoin, and again, we haven't even gotten to the hashing algorithm yet. We're still on the elliptic curve here. Adrian is hitting the ATO. All right. So the reality of it is that it needs to take the elliptic curve. It needs to be able to hack it, and it needs to be able to do that in a reasonable time, and it needs to be able to do that in a way that can interface with classical systems. But that is a serious problem, because here's the other issue with quantum computers. They aren't actually giving you a right answer. They're giving you a probabilistic outcome. Because remember what I said, 0 and 1.
Yeah.
So it is giving you a probabilistic outcome. And the only way currently construed for them to do it in any kind of a classical system, so what I mean is they have a quantum computer that's interfacing with a classical system, it can't possibly hold all of those combinations in memory. So if you happen to have a correct probabilistic outcome in memory, it's lost. Because it's trying to randomly cycle through what the proper sequence will be to quote unquote hack this wallet or this elliptic curve. So you have a problem of instability and you have a problem of memory. That's two things there. Then you have a problem of actual operating state, which is absolute zero.
Absolute zero.
Then you have another. Then there's the final problem. Well, not the final problem, but the biggest problem is, how is data represented in physical space? If you have a hard drive, it has data on it, right? How is that data represented? It is represented in a classical state. It's going to be 0 or it's going to be 1. If this is a these comments,
dude, people are on fire right now.
So, and I apologize, guys. I'm trying to give a very petty.
No, I think this is doing its job. And
no, people are digging it.
In how complicated this is, like you're doing a great job. But, yeah.
So there's the problem of actually being able to have a computer that can do these calculations.
Okay, I'll stop. Stop on the comments.
The other problem is that you have the issue of actually having a machine that can do this kind of calculation. You're talking about something that is doing calculations on orders of magnitude that we can't possibly fathom. There is no physical substrate that exists for a computer to be made out of that will allow it to do these calculations. There are limits to what can be represented energetically in a system. Those bits and bytes, they represent an energetic state. You cannot just say, we have a quantum computer and we're going to quantum it some more and scale it up to infinity. I'm trying not to read these fucking comments. And scale it up to infinity and then have it work. So I'm done. I can't with the comments.
Okay, we can wrap it up. Okay, so it's hard as hell.
Well, so it's hard as hell.
Quantum computing.
It can't be done. All right. It can't be done. So anytime you read this bullshit about a quantum computer hacking Bitcoin, look, I wrote a 30-page paper on it that I'm going to review and put it out. So you guys, please read it. But listen, it cannot be done. In my lifetime, in my great-grandchildren's lifetime, it cannot be done. Also, I ask you a very, very simple question to really, really consider here when you're thinking about quantum computers. Now, before I continue, I just want to say something very specific here. I'm not saying that quantum computers are useless. That's not what I'm saying. What I'm saying is they have their uses hacking and brute force attacks are not one of them.
Yeah, it's probably not step one.
Right? You have discrete mathematics, which is going to come down to 0 or 1. Then you have quantum mathematics, which is 0 and 1, and all of the nuances in between. That doesn't work for hacking. That works for maybe disease mapping. That works for maybe weather. That works for enhancing AI language models. Right? You have a lot of either ors or dual meanings, and you have a lot of different things that can come into with language models that can be enhanced by quantum computers. These comments are fucking killing me. I'm trying not to read them.
I need to hide them. It's
So
just too good.
the reality of it is that they're not suited to brute force attacks. They're suited to very, very theoretical applications. And 1 + 1 = 2 is not theoretical. That's set in stone. So it's just not the right tool for it. And without even getting into the hashing algorithm, I'll just tell you that the hashing algorithm is theoretically, susceptible to something called Grover's algorithm, which is a crock of shit because it's already quantum resistant, the hashing algorithm, right? Grover's algorithm is essentially doing something called a black box guess, which means it's trying to do a probabilistic guess with no inputs. So I leave you to try to figure that one out. Oh yeah, so.
Well, let me just recap what I think you just said, Adrian.
Okay, here we go.
I'm a quantum computer because I understood everything you said, and I didn't understand the fucking thing you said.
There you go.
That's
actually accurate. That's actually accurate. Yeah.
These comments, these are probably some of the best YouTube comments I've had.
Yeah, these comments are just ridiculous. And look, I understand that I was very, very flippant with some of it, and I didn't go into detail enough with some of it, and some of it may be confusing. Again, I have a very, very long and detailed write-up for anyone that wants to actually learn about this. Jeff, I think you've actually read part of it.
Yeah.
So
please post it again. I think it's a good time. Obviously, Google has got a long way to go with this. Probably it's going to take some time, and many people have put this in the comments as well. Like everybody's going to be attacking Chase Bank, right? Like the financial system, as opposed to putting all of this power and energy into trying to hack Bitcoin, or I mean either other coins or altcoins or.
Jeff, that's the right take right there. Look, we need a cubic I don't even know what kind of computer it is. We need a computer that we can't even understand. For people that run a company, Microsoft, that don't even believe in Bitcoin, they're not going to, I know it's not Microsoft, I know it was Google that did this. You think they're going to allocate any time on this? They're just going to go after resetting somebody's email and logging into their account and draining it of the funds. It's so much easier. They take it the easiest path.
Okay, so here's the thing. There are a lot of so I've invested in quantum stocks, right? I've made a lot of money off of them. That's because I realize it's a cash grab. And here's why I'm saying that. There are a lot of companies that are putting billions into this. Microsoft has, you have Google, you have all these other companies that have done it. But quantum computing is not new. It was proposed for the first time in 1958, I want to say. This is not a new concept. This is something they've been working on forever. It has less progress than fusion, right? So fusion is something that's been 5 years away for 50 years. But we actually have large working models of colliders that have finally reached the point of having more energy output from the inputs, right? So theoretically, fusion is now literally 40, 50 years away, for real. With a quantum computer, it is not something that you can even say is theoretically close just because they have working quantum computers. The equivalent of math that they're doing is not even algebra yet. It's still very, very basic. And they're setting up these examples and these tests and these scenarios in an environment that is tailor-made for a quantum computer. And they're saying, look how well this quantum computer works in a quantum environment. Yeah, sure, that's fine, but it still has to interface with a classical system. So you have a level of complexity that is not going to be done away with anytime soon. And the final point, well, not the final point, but one point I'll make on this is, what benefit is there for a quantum computer over a classical computer for anything that we do right now? What is the step function increase? What is going to make anything faster?
Sounds like a shitload of effort.
It's a shitload of effort for nothing.
Yeah.
For any classical system that currently exists, it's not worth it.
Yeah, and Christoph just brought this up, which I think is good too. I mean, the difficulty adjustment is put in place for some of this stuff as well, like the advancement of computers, where if computers start figuring out and mining Bitcoins faster, there's a difficulty adjustment which corrects for how fast the computers are mining Bitcoin as well, which is a...
Also, there's another common sense question here.
Wouldn't it make more economical sense for the money spent on doing this to just buy the Bitcoins, put it on the balance sheet, something else?
Yes.
Yeah, but the thing is, a lot of the people pushing the quantum thing, and I'm going to sound like I'm taking shots at people because I actually am. There are a lot of PhDs out there that want to stay relevant, so they keep pushing agendas, right? And the quantum agenda has been pushed for about 20, 30 years now, without fail, by people that are trying to do research, and they're trying to get money behind the research, and they're talking to dim-witted board members, and they're trying to say quantum in front of them to really make them think that they're going to be doing something revolutionary. They're not. I think I have ED now. Wow. So with that said, let's take the extreme case. Let's say that tomorrow someone develops a quantum computer that can hack Bitcoin. So what? Update the protocol, make it quantum resistant, and then wait for the world to fall apart, because they're not going to come after Bitcoin. They're going to come after the nuclear codes. They're going to go after the banking system. They're going to go after military systems. They're going to go after everything. And also, the person or company that figures that shit out, they're going to be public enemy number one for the entire planet. So it is not any real worry for the next 100 years at minimum, is what I would say. Best cure for ED is hard money. I would agree. These comments are gold.
These comments are reading them, and these are out of control, and there's so many of them. There are so many of them. Okay, all right, we got to shift gears. I mean, that was holy moly. I'm gonna have fun going back and looking at that one. Adrian, please repost your article that you've created. Throw it. Oh, we lost him. Quantum computers 1 and 0 at the same time.
Yeah, he's here and not here.
No signal, upside down. He got attacked.
You might have a quantum computer, but if you can't attach to the internet, then it doesn't freaking matter.
Oh man, that's tough. Okay, well, we lost Adrian. Now he's on mute. He got attacked. Okay, Adrian, we're gonna shift gears if you can hear us. We're gonna go back to some bullish MicroStrategy content. We're going to shift gears and go over to Dan Hillary. We're going to talk about NAV multiplier a little bit and just think about some ways to think about the equity. Dan, I know you've got some prepped content on this. I'm going to pass it over to you. We'll pull it up. I also encourage everybody to check out the MSTR tracker. You know, some great content, and it's been updated quite a bit recently. You can check out, you know, where they rank in the US market, daily traded volume ranking. You could look at NAV multiplier. You could do all these other different analysis using the information there. So please take a peek at the MSTR tracker. All right, Dan, over to you. Can you make it a little bit bigger, please?
Yep. Can you guys see this?
Yeah. Yes.
This is just a sheet that
and freeze your panes. Go to cell B5 and freeze your panes. Oh, mate. It's with Google. Never mind. I don't know. We'll figure it out later. Keep going.
Cool. Yeah. Jeff and I made this a few weeks back, but what it is just the percentage ATM sold into the weekly volume of MSTR since the 2021 plan. And we had thought he was targeting roughly around 7% of the weekly volume for at the market selling and purchasing of Bitcoin. And that was correct those first 2 weeks.
Oh yeah.
You can see here we had the 3 billion convert, and so obviously I included that in the announced Bitcoin purchase in that third week of November. But the ATM usage has been a lot lower as a percentage of volume. Maybe that's just because there's been more sell pressure in the market. The share price got clobbered, so Saylor said he won't push the share price down much farther. But you can see that the ATM is dynamic, and he's not just hammering 7% every week.
Yeah, it was interesting. I mean, we were so bullish on them buying what was like 100,000 Bitcoin. Shit, it was close. Not close actually. I think we're off by 75,000 Bitcoin, but that's fine.
I said too much. I was booted by the quantum major.
You were booted. You're back though. Glad to have you back, Adrian. Okay, so this is interesting though, and it's good to think about. So the other piece of data that you have here is the $3 billion convert that was announced on the week of November 18th. I think it was the 19th or end of day on the 18th. I think it was closed on the 20th. And so you have now $3 billion of stock in the market, or let's say they had a delta of 70. So you've got 70% of that $3 billion is sold short immediately. What is that?
Right,
It's like $2.2 billion. So now you've got $2.2 billion short in the market. And that $2.2 billion short in the market represents 2% of the stock. And now that those short positions are now being arbed out as the price moves up and down over time too. So that could be that why we're seeing a spike in volume there too, is that there is kind of arb going on in between intraday, and any transaction indicates a volume movement, right? So you could have high frequency trading right at the margin that results in more volume, but it could be these arb traders playing with $2.2 billion, just speculating around the vol.
Yeah, completely. So definitely interesting to see how it's changed over time, and nothing's really a sure thing in terms of ATM going into the future, I think. And we've seen that he uses it opportunistically, because he was definitely selling into a lot of strength. Something to think about looking at potential NASDAQ inclusion. I suspect he'll up these numbers once into whether it be the front running or the passive flows, and hopefully get up to 7%.
Yeah. So can you explain ARB? So in this context of ARB or like arbitrage is like buying and selling something when, data is incongruent. So like if you have information in one system and the value is worth something over here and the value is worth something different over here, you sell over here for the value over here, and you do that back and forth hundreds and thousands of times to, I guess, arbitrage data discrepancies and computer potential discrepancies. In this scenario, in this circumstance, what I mean by ARB is they may be closing those short positions based on small movements up in the stock to capture that delta. So they would be buying the stock, moving up to close a short position, or going the opposite way, shorting the position to hedge out their long even more. Because when anybody's buying the convertible debt, they actually are, they have the equity as a long position. So if the price of the stock goes up, they may want to short the stock to effectively lock in the profit of the conversion price that they sold the bond at. So that's the context of ARB in that scenario. Yeah, somebody says ARB. Google Richard Byworth MSTR. The video I did with Richard Byworth on YouTube is really, really good. We talked about the convertible debt market and how these guys are working to make the market, and how the convertible ARB. We basically got into the mind of a convertible ARB buyer, convertible ARB desk buyer, and who's buying these bonds. So he's got a few interviews out there. Watch them all. This is one of the smartest guys I've ever talked to. Go ahead, Dan. Back over to you.
Sure. Yeah. This is and this is just cut from the same cloth. It's I scraped the data from MSTR Tracker. These are all the buys.
Can you go bigger?
Yeah, I can go bigger. Let's see. It'll look more clean when I move over to the right side. That's the important information. But these are all just MSTR's buys on each date that they were announced by Saylor on Twitter. You can see it includes Bitcoin purchase price, the amount of Bitcoin, the cost, and some other metrics, including shares outstanding. But I wanted to look like, okay, how have things changed since the 21-21 plan has been announced? What's different? How faster is MSTR acquiring BTC per share? And what does that look like with a P to E ratio, starting to think about FASB and preparing for all that? I think, mania that could ensue. And you can see this is the annualized BTC yield. So again, BTC yield is just that traditional metric Saylor developed for the increase in Bitcoin per share. And you can see annualized over the last 3 buys or last 4 buys during November. This is your trailing 1 month annualized BTC yield. So these numbers that they're hitting, 842% annualized BTC yield, if they continue to acquire Bitcoin at the rate at which they've done so through November, right? It's just like a fantastic rate. And it's hard to imagine they're going to continue doing it. But if they do, like, that's a lot more than 10% annually, right? And we know, obviously, that they have about 70% BTC yield this year and potentially more.
Hey, Dan, real quick, can you just scroll to the left a little bit?
Yeah.
So what you're saying is that it's basically done more than a 10x. You see the 29% would correspond to 203, and the 83% corresponds with the 842. Is that how to read that?
It's pretty much just a rate of Bitcoin increase. Like, this isn't.
Yeah, no, I get that, but pretty much if you look at those numbers,
Yes.
if you look at the tranche -10, 29, 57, 83, those 4 acquisitions, and you look at the next 4 acquisitions, it's pretty much almost, some case, pretty much almost a 10x.
Yeah, exactly. They're acquiring Bitcoin 10 times faster than they were a month ago.
That was my point. Thank you. I'll go back.
Exactly.
And which is huge, right? 10. Let's say that again, really slow, Dan.
Well, I'll just say what I said. If you look at the last 8 transactions, right? You count 8 rows, and you just row 14 down to row 21, right? So you go 1, 2, 3, 4. You go from -10 to 83%. And then you go from there 203, 432, 580, 842. Those 4 rows. If you were to put them next to each other, there's pretty much a 10x increase. Obviously, the -10 is 200% or actually more. But it's a 10x gain in the rate of accretion.
Exactly.
Accretive.
Yeah. Exactly. Spot on. Right. This has nothing to do really with it.
Awesome. Thank you.
Yeah. And it has really nothing to do with the increase in Bitcoin price, right? This is just the Bitcoin they're bringing in, the new Bitcoin they're bringing into their capital structure. Then.
Right. So, yeah. Right. So again, so when he was interviewed by the New Zealander, I don't remember her name, somebody will correct me. What he said was he's able to buy a digital property in cyberspace and arbitrage the difference between that in, I don't remember, 48 hours or 3 days. He said that on the New Zealander podcast. And everybody's like,
yeah.
Oh, and how do you determine if you're smart in real estate? Go acquire billions of dollars. 5 years later, after you built the place and sell all the units, then you determine if you're smart. But what his test case here is, thank you for making the dashboard. That's what this is. And what you're showing is the increase in accretion or being accretive versus the previous 4 tranches or acquisitions prior to that. And it's at a 10x rate. And that's his test case to show his ability to convert from fiat into digital property. To quote Saylor, I didn't invent any of this, but we all listened to his podcast, and that's what he said he's going to do, and now he's delivered on it. Did I miss anything?
No.
Oh, okay,
No,
cool.
Yeah.
I think this means the price is going to go up, though.
Higher.
Well, look at this. This is earnings per share only accounting for the new Bitcoin that's been added to the balance sheet. It doesn't even include the earnings as a result of their current stack increasing in value based on an increase in Bitcoin price, right? So if you just look at the amount of new Bitcoins they've added to their balance sheet as a function of at the market selling and convertible debt offerings, you're looking at a $70 earnings per share here over the last.
Is that just
that's annualized over the last month? Excuse me. That's annualized over the last month.
Is that just the net Bitcoin after additional shares, the dilution?
Yeah, it's the number of Bitcoin that have been added to the balance sheet, unless I did it wrong, but I think it's the number of Bitcoin added to the balance sheet, the total value divided by the outstanding shares in the last quarter.
So you might want to look at the net Bitcoin net of dilution.
Right. So look, in the previous column, I just said you basically have a 10x number. If you look in column J, what you have there is 9 times 8 is 72. We all learned that in second grade. But if that was an 80 number, then you see a 10x right there, which we just saw in column I. So either way, even if your math is wrong on something, either way, there's both. I don't see you could be wrong in both categories. Oh my God. Then you go to column K. Column K is approximately, so what would that be? 6 into 100 is 13. Sorry, is 12. So what you're seeing right there is you got a 12 or 13x gain, and then you see the same thing in column L. Unless all your calculations are wrong on the whole document, which I don't think that's the case, because you're comparing it in the the bigger numbers as you go farther down shows you like proportional changes, for lack of a better term. So the key part about this is, this is my belief based upon what you just said here, Dan, is that proportionally, if we believe in a power law, not the power law of Bitcoin, but proportionally for each dollar increase of each change in the price of Bitcoin, given the higher, since it's the Bitcoin per share is now higher, for a given price change in Bitcoin will lead to more volatility in either direction on MicroStrategy. Is that right? So as the price of Bitcoin goes up, for what the dollar amount happened 4 weeks ago or 2 weeks ago is different today, but proportionally on the upside and the downside is proportionally higher, right?
Yeah.
Okay, that sounds great. Thank you. I'm gonna go get chocolate ice cream.
Oh, rip it. Lucky duck. That's for me later. Okay. You done, Dan?
Yeah, I'm done.
Okay, cool. So thank you. Appreciate your insight. I just did napkin math on while you're walking through that. I get to a similar number, right? Their average cost basis for their Bitcoin buys is $60,000. They hold 423,000 Bitcoin on their balance sheet. The price of Bitcoin at $100,000. So let's just say they've got a gain of $40,000 that they're holding on their balance sheet, multiplied by 423,000 Bitcoin. It's about $16 billion divided by about 240 million shares. That's about $70 earnings per share for all of the Bitcoin on balance sheet, just over time, and that's not accounting for any future potential accretion. So let's just say you took a 30 times PE ratio.
2,700.
Yeah, it's 2,100. Yeah, 30x PE ratio would be 2,100 MicroStrategy price, just based on the EPS on their average, or the gain, the as if net income gain that they hold on balance sheet as retained earnings moving forward into the future. And the FASB conversation will come up a little bit later when we talk about questions. But I just wanted to get into the NAV premium argument a little bit more, because this is it's a fascinating, it comes up from all of the bears, and it's an interesting conversation. And in speaking with Richard Byworth as well, like many people are looking at this NAV premium and using this as an opportunity to arb, and I use that word again, arb Bitcoin, IBIT, and MicroStrategy back and forth. So I don't know if anybody's heard of CMSTR. It's set up by Stoker.io, which is, I think, inspired by Blockstream. So Adam Back's involved in that project. CMSTR is collateralized MSTR shares that are tokenized, tradable 24/7, 365. You can hold in a hardware wallet. They're not available in the US. It's only available in Europe. And they're collateralized by a Swiss bank. and you can trade back and forth between Bitcoin and CMSTR, which is a collateralized MicroStrategy product, when you think that things are out of whack. So in a circumstance like this, where the NAV premium goes high, if you think there's going to be a reversion to the mean, you can sell MicroStrategy at that point, or your CMSTR, and roll into Bitcoin, and vice versa. When the price comes down in this perspective, you can roll back into MSTR and profit off of that delta between the two. So in my conversation with Richard Byworth, we think this is likely going to be happening, and it is happening, and it's probably going to happen more often as this trade becomes more and more volatile, which many people are probably going to be surprised when it becomes more volatile. The people are going to be arbing this NAV premium back and forth between IBIT and Bitcoin and other products. So we will see a continue, in my opinion, I think we will see higher highs and higher lows, and we'll see this almost move like a stock in perpetuity, kind of grinding upwards as well. And a lot of people like to use the comparison of NAV premium or price to book, but you can compare price to book value for any stock. Like, that is a metric that you can look at. A lot of people like to compare price to book value to insurance companies or banks. Most insurance companies or banks trade around like 1 or 2 price to book value. And they say MicroStrategy should trade at 1 to 2 price to book value. But they don't realize that insurance companies and banks are not sexy businesses. Like, there's a reason they're at 1 to 2 price to book, because it's not a sexy business model. Their opportunity for outsized profit is effectively zero. Right, they're all operating on incredibly thin margins. They're running actuarial analysis. They're running on only making income off of their investments, and most of them are making underwriting losses. So I think it's a poor comparison to a company that's buying the hardest money on the planet and has more of the hardest money on the planet than any other company will ever have. And I think it's a really poor metric to compare price to book to, like a bank or an insurance company. So wanted to throw that out there. I think using or thinking about a MicroStrategy as a growth company, because as Dan had very clearly outlined, right, they've increased the speed at which they're acquiring Bitcoin much faster within the last couple of months. So fast even that Fred Krueger is on board and buying MicroStrategy, which is like I think a little bit of a mind bender for many people. So yeah, I think there's going to be people that are trading this. And the fact that the NAV premium is spiking higher, you've noticed that, like, even with these high spikes in the past, like almost everybody back in March, all the bears back in March said that MicroStrategy was overvalued and the NAV premium was never going to go back to as high as it was in March. Well, guess what? We're back, baby. We're higher. And even where we're sitting right now is roughly near what the peak was back in March. And we're seeing this kind of higher high and higher low circumstance that we see, like with equities as well. I think we'll continue to see that happen as more passive flows come into the stock and are buying equity at the margin at any price. And all of the hodlers continue to hold and sit in this position because it makes sense long term. Anybody have anything to add there? No? Cool. All right. Going to the comments still ripping. Oh man. Mm-hmm. The Freddy pump. All your models are destroyed. I love it. Okay. And actually somebody just said this. James Invest Answers has been using that strategy for years now. Yes. I think he has an ARB model. I'm pretty sure he's ARBing this thing all the time. I talked to him at Bitcoin First back in Santa Monica. And I think he's using these metrics, and he's got a computer algorithm that's set up to use these metrics to go kind of back and forth based on some proprietary information that he's kind of scraped in the models that he's using. So, like, you gotta understand that there are many people that are trading this, and they're using all different metrics, and all metrics will work until they don't, right? Like, people can trade the NAV premium, great. It may surprise to the upside if people stop trading the NAV premium, or if you have a new set of buyers that's coming in the door. There's so much game theory involved with this. It would be difficult in my mind. I'm sure you can train a model pretty closely to find some opportunity here, but could be difficult. Okay, I think maybe it's time. I mean, we're almost 2 hours in. Time to jump to some questions. You guys cool with that?
Mm-hmm.
Let's jump to some questions. Let me hide my screen. All right, perfect. Adrian's got to drop soon. We're gonna roll through some questions here. I think this could be good. So we posted on MSTR True North that we will be answering questions, and we got 114 comments. We're gonna roll through just a few. We're gonna roll through a few of these, and I'm just gonna go from the top. I think this is kind of as they came in. So we'll throw these out to the crew, and we'll tackle them. See where we go. So FASB adoption clarification regarding Q1 earnings and how they will be reported. Will it show 25 Q1 BTC unrealized profits, or will it show the entirety of unrealized gains since the BTC treasury strategy? So this is a conversation we've had internally in our group, and I think we've had it externally as well. There's been some stuff that's posted about this. I'm relatively certain. This is not financial advice. I'm not a CPA. I'm relatively certain that all of the existing gain from all of the BTC purchased over time, all of the gain goes to retained earnings at the end of the period. So at the end of the period being 2024, if we think that MicroStrategy is going to adopt FASB fair value accounting in Q1 2025, which is the last period they have to potentially adopt it. In Q1 2025, we think, hold on a second. So in Q1 2025, we think MicroStrategy will adopt FASB fair value accounting. At that point, any gain that happens during Q1 of 2025 is added to, it effectively rolls through to net income. Any gain and loss, right? So this could go the opposite way as well. So if the price of Bitcoin at the beginning of the period is 150,000, and at the end of the period, end of Q1, it's 125,000, it would be a $25,000 loss multiplied by the entirety of their Bitcoin holdings. So that's how it works, being marked to market at fair value. Conversely, that can go the opposite way. And just to put this in perspective, right? If for every $12,000 that the price of Bitcoin goes up during a period, MicroStrategy would be adding $5 billion of net income to their bottom line, which is roughly the annual net income of all of the companies that they're currently trading around within the equity market. So it's a staggering number, right? If we see a candle of 25, 35, 45, 50,000, if we see a candle of $50,000 within a quarter, within 3 months, which could happen, that would be, you're looking at a $40 billion net income in a single quarter, which is up there with the top publicly traded equities in the market. Conversely, this can go the opposite way, right? So you've got some reflexivity. This could go the opposite direction. But ultimately, if we think this thing is grinding higher over time, there's significant probability that the gain outweighs the loss. Okay, go back to sharing my screen here. Oh, was I not sharing it the whole time? Oh, well. All right. And we'll go to the next one. Okay, so the next question: what advice would you give someone with a significant MSTR position and 0 Bitcoin in cold storage or ETFs? Who wants to take this one?
Buy Bitcoin.
Yeah, yes.
That's not acceptable. Buy Bitcoin.
Yes, I'm completely in agreement there. Me too.
Yeah, you got to get off 0. There's the bear asset aspect of it is kind of there's no negotiation around that.
You learn so much about doing a Bitcoin transaction in cold storage. The process alone, understanding what you're holding. I feel like if you don't do a cold storage, if you don't have any Bitcoin in cold storage and you haven't moved anything over, it's really difficult to understand the technology and the power of the technology, and the decentralized nature, right? Like nobody can touch my cold storage Bitcoin. It's like it's locked away. It's gone. I lost it in a boating accident, and get off 0. I think getting off of 0 is great advice. None of this is financial advice, but getting off of 0, I think, is great advice. and move it. Don't just buy. Don't just buy Bitcoin on an exchange. Like do the damn thing. Go buy a Trezor wallet or a Ledger wallet and move it to cold storage. Just do it. It doesn't have to be much, right? It could be $1,000. It could be $5,000. Like whatever is meaningful enough for you to pay attention to it. Like that's what I would suggest. Adrian,
You might get roasted for saying ledger.
yeah, I know. Whatever.
Yeah, so the whole ledger thing, that was only an issue if you had altcoins on it. If you held Bitcoin on it, you were never in danger. So there's no third-party Web3 apps that people were downloading for Bitcoin, which is why Bitcoin's awesome.
Yeah. Okay, so we'll move to the next one. Can't wait. Could you compare some other recent stock performances? I said go look at AppLovin. When AppLovin was announced that they were added to the QQQ, which was a bit of a surprise because it was out of order, and it was just a couple of weeks ago. I think just on the news that they were added to QQQ, I think the stock jumped like 12%, something like that. That was just a couple of weeks ago. Go take a look at that one. But it's honestly hard to compare. I think Tesla's a good comparison. If you go look back in 2013 when they were added, seeing the performance over time, over the next 3 months, I think the stock tripled in market cap. So I think that might be an okay comparison, but there's no other, like, even as you say, Eric, I realize there's no other company. There's no other company that's had, more capital than any other company in the world. So difficult to have a good comparison there.
A lot of people in the comments are saying not ledger, not ledger, not ledger. So it depends on, again, what you're using it for. One of the things I use Ledger for is to sign my multi-sig wallet, right? So you don't necessarily have to use Ledger as your primary storage medium. You can use Ledger to help sign your multi-sig if you have multi-sig. And if you don't have multi-sig and you don't know what multi-sig is, it's just you do some research and get on that.
Yep, absolutely.
I think the biggest ding on Ledger that I've heard is, I guess besides not being Bitcoin only, is I think it's not open source, is it?
No, it's not. And at least I don't think it is. No.
Yeah, I think they're not.
And the other ding is that they had this service that allows them to recover your lost keys or whatnot. And people were trying to say, oh, they're hacking your Bitcoin or they're tracking your wallet or tracking your keys. No, it's a service you have to sign up for and pay for, I believe, in order to do that on Ledger. So I think a lot of people need to just chill. A lot of these hardware wallets are fine. It just matters on what you're using them for. I only use them now for multi-sig because I still have a node and I still store some Bitcoin in a hot wallet on several nodes. So there's different ways you can do things.
And the other thing is, if you're going to do single sig or multi-sig, and that's a whole nother rabbit hole getting into. But like storing your keys is a whole process, right? I cannot recommend doing this enough, because you start to think about, okay, well, my keys are these 12 words or these 24 words. How can I separate them? How do I make sure that they don't get destroyed? How do I make sure they don't get stolen? And you start to think about all of these questions, and it's like the Bitcoiner's journey, right? It's like, oh, do I need to buy a property that's geographically diversified from my current property and split one key over there and another key over here? Or do I move three? Do I hold 3 of one key and give somebody else another key? And you start to think through these like multi-key scenarios, and then there's hundreds of thousands of ways to do that. So it's a worthy time, a worthy use of time. Okay, moving on. I would love to see True North members continue discussing the nuances of MSTR covered calls to generate income, especially in relation to the estimated future impact of MSTR Gallison price. And then additionally, which I think is funny, where'd it go? Oh, I don't want to comment on this. Somebody mentioned, especially what will the effect be if it becomes very popular? Seems that it wouldn't work very well. And I think this is an interesting question. I think it's actually the opposite. Because if people understand that holding this stock and the value of holding the stock and running a covered call strategy that generates income, and the amount of premium that you can get on some of these these covered call strategies that are 100% out of the money, you could be generating, 2 points, 2, 4, 5 points a month. Later, Adrian.
Peace, guys.
You'd be generating, multiple. You could be generating, I don't know, 2% a month, which would be 24% a year on top of potential appreciation from running a covered call strategy. And if people start to understand the value of the premium of holding this equity, that's going to make people rush to buy shares. I think there's going to be more people that are going to be sitting long and using those collateralized. Those are basically collateralized positions that they would be generating income off of. Anything else you want to mention, Soleil?
Yeah, I mean, I personally think if you're mechanically selling them, it'll probably underperform just buy and hold if you're just kind of reckless with it, like I used to do. Maybe being a little bit strategic with it could potentially outperform buy and hold, but you have to be very comfortable with the risk of getting your shares called away. But related to this specific question, where they said estimate the future impact of MSTR catalysts on the share price.
Yeah, I'm not going to do that.
Yeah, I don't think that's gonna wreck the price or do anything to it. I mean, there's always somebody on both sides of the trade, and we need that for the volatility to be happening. So
yeah, and again, I'm going to say this again, like sometimes you might be okay getting your shares called away, and I think that's the people that are going to start running this trade, right? Like, I'm going to use a scenario. Let's just say you had 5,000 shares. If you want to sell covered calls on 1,000 shares on your position, 20%, let's just say you sell them 100% out of the money, and you're okay losing or getting somebody to pay you for those 1,000 shares, double what they're worth now, then that's a valuable opportunity to systemically pull some money off the table in the trade to improve your life, right? And in the meantime, if the strike isn't hit, you're generating income, right? Like that's a cool concept. That's a really cool concept. So
yeah, and also, I mean, the other I think a no-brainer situation is if you already know you're going to exit that position, then in that scenario you don't have to worry about the shares getting called away because you were going to sell off some shares anyway.
Right. Yeah, this is going to continue to develop. I think we're going to see this more and more over time. I'm personally not selling covered calls now. Why? Because I still have a fiat mining job where I have income, but that may change at some point in the future where I may want to leverage my portfolio to generate income to go do something different or whatever that might be. Okay, cool. Maybe a couple more. mNAV. No, I already talked to that one. What was the other one here? Quiet periods. Out of the money calls. 2025 catalyst. We already went through that. 1/17/25 option expiry date is looking at a deeper dive into the game theory dynamics. Could be a historical day. I've talked about this. I mean, nobody knows exactly how this is going to go. Some people think this could go the opposite way. This could be overblown. The January 17th, 2025 option expiration is pretty big and monumental in my opinion because a ton of LEAP options were purchased in 2022 and 2023 with the January 17th, 2025 date. And they were the longest options that were available for a very long period of time. I want to say at least 6 months. So I know those options were hammered heavy, and the price has run since then so significantly that many of those options are really deep in the money. And those options that are really deep in the money, there's more incentive to exercise those positions than to sell the options and roll them or move them forward. Because when you exercise shares, that is not a taxable event. It restarts the clock on your taxable period, but that's not a taxable event. So if you exercise those shares, again, none of this is financial advice, none of this is tax advice, but if you exercise those shares, you now have that position that you can run covered call strategies off of, or you can run, you can start to generate yield, and the opportunity cost of capital of using that elsewhere just doesn't personally make sense to me. So I know there are many people that are thinking very similar to me, in that if you have deep in the money call options, there's incentive to exercise those as opposed to sell them, so you can continue to leverage that position into perpetuity. So I think that Wall Street might miss a little bit on how many people are going to exercise these positions as opposed to selling them. Now, everybody's going to say, oh, these market makers are fully hedged on those positions. They have enough shares that if people exercise, they'd be able to deliver the shares. And I'd say that that's probably true, but there's not regulation on market makers. So we don't know exactly how hedged they are. We don't know if they are 100% hedged. Nobody knows, right? Like, these market makers could potentially go out of business, and they're trading at the margin on all of these trades into perpetuity. And they're taking probabilistic scenarios of equities going in the money on all of the option periods, on all of the strikes across the entire options curve. And they're taking all of those dates into consideration about how many shares they need to hold to cover their ass on their position. So there's a lot of data that goes into consideration I'm pretty sure there's a lot of data that goes into consideration on how hedged those positions are. And all of those market makers, there's a dozen of them, may do it a little bit differently. And additionally, like, if you have a really deep in the money call option, let's just say you have a $50 strike, and you have a $50 strike, and the stock is trading at $400. You got two options, right? You can sell the option, and there's an option buyer that's going to buy the option back from you. Okay, in that scenario, the market maker, if the market maker is buying that option back from you, they can go sell any other equity in the entire market to pay that position. So, like, they don't need to change their hedge position at all. But if you ask for delivery of your shares, they've got to give you their shares that they're holding to hedge that position. So it's a really complex dynamic.
Hey, Jeff,
go ahead, Green.
Okay, look, I'm gonna, and I'm not trying to be pedantic, I'm just gonna be a clarification here. When you sell your position, right, and so you own an outright naked long call, when you sell that position, right, you sell to close, it's not actually being sold. What's happening is the market maker will simultaneously close their delta hedged position against that. So everybody's always like, there's always a person on the other side of the trade. No, you're trading against the market maker. Now what happens is Jeff wants to have these shares delivered, and he says, nope, I'm going to go to the end. I'm going to exercise. I want the shares. So the market maker doesn't have the shares. Now they can go run out and go have to buy it immediately. Or what they can do is they can come to me and they could borrow I could loan them my shares, hypothecate the shares. And what the market maker does is borrows from the people that have a lot of shares. I talked about this before. So I loan those shares to the market maker, which then credits that to Jeff's account. So Jeff's like, oh my God, I have these shares. And what the market maker then does is they wait over the next few days, hopefully for the market to drop in order to buy. And why would they do that? They may pay me 20, 30, 40% annual percentage rate, which is cheaper than buying the spot price. But that's where you can potentially get the so-called gamma squeeze, where it just can't be done. There's not enough shares that they could borrow from me, and then they become buyers at any price. So that's the difference that happens, is that if we see going into January 17th, correct?
Yep.
If we see on that Monday of the week or Tuesday that MSTR starts getting loaned out, and I'll see it, or anybody that does hypothecation we'll see that. And that means what they're trying to do is borrow those shares in order to get anticipation of having to deliver them on Friday. And so I'll see that, and anybody that does that will see that information.
Yeah. Yeah. It's good to follow the hypothecation numbers. Like how much are shares being rehypothecated? What's the rate that they're paying for those? So sometimes it's low.
That rate will change on a daily basis, and it's usually on a fixed daily basis. So we'll see what happens, and that rate can get absurd. So with that, I hope it happens, and we'll see how this plays out.
Yeah, and that's where all the confluence of factors really comes into play here, right? It's everything happening at once, which is very similar to, I guess, like what was going on with Tesla in 2020. Like everything is happening at once. Like the gamma squeeze for Tesla in 2020, they hit profitability. They had record number of cars being delivered. They were getting included in the S&P 500. Everybody was trying to short the stock down, but you had huge passive ETF flows that were buying the shit out of the stock at any price. And you had everybody who knew how dangerous that position was. And then the stock ripped higher, and you had this kind of continuous, so they call it the infinite gamma squeeze. I mean, we could be back in it here in the Tesla environment, just looking at the price of Tesla today.
Yeah,
so
I want to chime in with Smoldemort. Grain is somewhat wrong. The shares are the last thing the market makers will touch. Every ETF with MSTR can also be used. Only the shares that are allowed to be, only that opt in to the hypothecation can be loaned. It's not, and if a ETF issuer was to do that, okay, on that shares, that would probably violate that ETF agreement. So it's unlikely that is capable of that happening. And if someone thinks that I'm wrong, they should post their data on hypothecation or the place where it says that it can actually be done. But with that said, I'm going to jump off over here, and this is my closing line. 1 week from today, we'll have another one of these calls. Is that correct, Jeff?
That's right. Every Wednesday.
Right. And on that day, the price of MicroStrategy could be maybe double the price of what it is today. Could be. Maybe 50% higher. So I can't wait until next Wednesday. I will sign off with saying this. If on Monday and Tuesday of next week, you make life-changing money, right? I think that is an awesome scenario to be in. And if you pay taxes, so be it. I think that paying taxes, it means that you made a profit. And if you don't like paying taxes, don't sell, right? And then you don't get the money to actually spend. So, and then there are holidays coming up, and maybe it's a good thing to buy presents for people. Just saying maybe. Anyway, have a great night. Thank you for putting this together, Jeff, and we all stayed on really late. And take care. And next week we'll know where we stand. Take care.
Absolutely.
Buddy.
Yeah, next week we'll know. Thanks, Grain.
Sure.
Yeah, I appreciate it, everybody. I think it's a good time to wrap up. Thank you for joining episode 10. I think the price of MicroStrategy even kind of ran in after hours there. I think it went up to like 415 or 417, back to 414. And we have 13,760 viewers. So thank you to everybody that has taken the time to watch and, devoted your Wednesday night to this. I can't believe there's 13,000 people here. That's crazy. And we'll continue to talk about MicroStrategy because it is the most exciting thing happening in all of finance right now. And I can't believe that people are just ignoring it and paying attention and writing scathing articles about it without having any understanding of what Bitcoin is. So this is going to be the most hated rally of all time. Please continue using the bear sighting, TN bear sighting. We'll do a segment every week with bears. We love them. Share them with us. Hit them with memes. It also confuses them, which makes it even more funny because they're like, what are all of these bear things? So I love the confusion aspect and the confusion vector as well. A lot of people asked about the merch website. The merch website is the HODL shop, the HODL shop. We will post the link on the True North website, or we'll post it on Twitter and something like that. And yeah, we'll be back next week. So appreciate the time. Soleil, any last words?
Just that veganism is an eating disorder, and go eat a steak.
Eat a steak. Yeah, steak is delicious. Oh my gosh. Ribeye?
Ribeye.
Ribeye? New York is pretty fire too, though. Yeah. Okay. All right. Thanks, everyone. Appreciate the time. Catch you later.
Good, Joe.